A very good afternoon. Onto your markets now. Asian markets were generally higher at the close of the week, taking their cue from US markets from the day before, with tech stocks leading the charge. The Nikkei share average jumped by 1.9%. The Hang Seng Index closed up 0.32%, while the Shanghai Composite Index ended the session down 0.07%. US equities put in another positive showing in yesterday's session, driven by higher earnings coming out from tech stocks, as well as comments from President Donald Trump on his approach to the current trade war between the United States and China, in which he's dramatically softened his tone and is seeking what he's described as constructive dialogue with the Chinese. However, China's come back to say that it will not dialogue with the United States until such time the whopping 145% import tariffs against it have been brought down. Trump's earlier reassurance that he'll be keeping his hands off the US Fed chair, Jerome Powell, is also said to have been positive for US key assets, namely US Treasuries and the US dollar, although the greenback has weakened a bit relative to the previous session. The Dow Jones Industrial Average rose by 1.23%. The S&P 500 gained 2.03%, while the Nasdaq Composite Index jumped 2.7%. All right, looking at the local indicators, we see that the all-share index is up 0.5% at 90,989 index points. The rand is trading at 18.88 against the US dollar, 21.40 vis-a-vis the euro, and 25.10 against the British pound. On the commodity front, we see that gold is trading at $3,300 an ounce, platinum at $969 an ounce, while Brent crude oil is trading at $66.37 a barrel. Well, for more on the markets, let's get into it with James Turb. He's the head of investment strategy for fixed income at Sanlam Investments. Thanks very much, James, for joining us. So it's been quite a week and markets are looking quite positive now, although they remain below the pre-Liberation Day announcement levels. What are your thoughts on Donald Trump essentially walking back on his miscalculated import tariffs against China? And how soon do you think the two sides need to conclude matters to minimize the economic damage that's already been caused?
Thanks for having me, Nompu, and that's a great question. I mean, it's really difficult to try and work out the game theory between the US president and China at the moment. And of course, his aggressive policy changes on tariffs and how it's sort of been reciprocated by China, and now walking it back, as you say, but China holding firm. It's so difficult to keep up with all of these things, and the world and the market is confused, right? You've opened up in your monologue really well in explaining what's been going on this week alone, with Monday showing terrible markets, Tuesday a recovery. We're ending off the week with most risk assets looking in the green, as it were, or looking profitable, but we've now got the currency weakening. So there's so many moving parts and normal correlation that we're used to dislocating. And in your question, I think the answer is as soon as possible. If those two countries can at least solidify on that relationship, I think we can move forward. But there's so many other things to contend with politically in the world. It's really making it a difficult environment.
Yeah. So, James, here at home, we've had word that the VAT increase proposal has been reversed. In the absence of knowing what the government's spending plans are, now that they have to be revised, will there be some level of sensitivity among investors around what our budget deficit may look like, given that National Treasury will need to find a further 75 billion rand over the medium term?
That's quite right. So we're seeing that play out in some of the bond market's behavior. Although it's been a good week for bonds overall, it's those longer bonds that aren't so sure about the ability to correct the deficits, to bring in the debt ratios as is desperately required to reduce our funding costs. And the good news, I guess, is we've seen evidence under Finance Minister Gorongwana that the commitment is there to reduce spending, but it's not as easy as that. And of course, like any budgetary item on the spending side, to cut has its challenges and its consequences. So the market will be, of course, paying close attention to the figures from here and looking out to the medium-term budget to see some progress on that.
So in the meantime, how are our local bond markets reacting and behaving? I mean, the rand doesn't really look like it's doing that well. It did make some gains, but it looks weaker again.
You're right, Nompu. So the rand is a crazy asset to look at, because in the last month it's been 18 rand to the dollar, 19 rand 93 to the dollar, and now we're kind of in the middle at 1888, as you say, and lamenting that it's, you know, it looks a little bit weaker, but the reality is it's just so volatile. And what's moving the rand, there's always a good opinion on what it could be. It does feel like at this point it's beholden to what the dollar is doing, and we've seen that the euro and the third currencies are weaker against the dollar, so there's dollar strength at play, but perhaps also with this crucially lower inflation data that we keep getting here in South Africa. I think it's lining up, as we spoke last time we did, on interest rate cut. I think those interest rate cuts have the effect of weakening the carry potential in the rand, and maybe that's at play as well. So we're seeing bond markets certainly starting to factor in interest rate cuts, more confirmation of those. In fact, discounting more than 2 interest rate cuts in the derivative market at the moment. And naturally, the currency can't ignore that, and I think that's leading to some of that rand weakness. But also, it's worth pointing out that we're going into a long weekend, Nompu, thankfully. But risk markets are always cautious going into long weekends, so perhaps it's a little bit of position and risk squaring ahead of the long weekend, because you never know what hits the headlines on a long weekend.
All right. We'll leave it on that note. Thank you so much, James, for your time and insights. As always, that was James Turp. He's the Head of Investment Strategy for Fixed Income at Sanlam Investments. After a short break, Diabosito will have SME on point for you. Do have a lovely long weekend. Take care.